Hi, it's Richard Geller. I want to tell you about the prospects for hedge funds investing in commercial real estate. What are hedge funds? Hedge funds are partnerships, and the partners are pensions, endowments, insurance companies, high net worth individuals. What they'll do is they'll allocate a small percentage of their money to higher risk activities like hedge funds. And the hedge fund will have someone managing the hedge fund who actually makes all the day-to-day decisions. People ask me what's the difference between a hedge fund and a private equity fund. Pretty much they're the same thing, but hedge funds will often give the manager of the money greater discretion as to what they can or can't invest in. Classically, hedge funds have gone short as well as long, meaning they've made money when assets fell as well as when they went up. But otherwise, they're pretty much the same thing. And when a hedge fund manager raises money, he or she will make a pitch to these limited partners, these investors, and it'll say, here's our approach, here's what we're going to do. And then they pretty much stick to that approach for the life of the hedge fund. Funds will invest sometimes in stocks and bonds. Most hedge funds traditionally have invested in very liquid securities that are bought and sold by the billions every day. Some will deal in oil, gas, and commodities. Some will deal with less liquid investments. A few of them are getting into real estate mortgages, and fewer still are getting into workouts for commercial real estate, recapitalizations, workouts, commercial loan bonds. What matters to a hedge fund is that they never lose money. That's the worst thing, to lose money. And also that they have an exit. Because funds will have a limited life, like 7 or 10 years. So that means that the manager has to make sure he or she can get the investor's money back within 7 to 10 years. So that the investments typically are shorter term than that, often 3 or 4 years. Also, these limited partners sometimes want their money back early, which are called redemptions. So it's nice to give money back when they ask, but the trouble is that sometimes early redemptions cause losses, and redemptions are often limited and restricted, so the limited partners really can't get all their money back when they want. Now, the trouble with hedge funds investing in stocks and bonds has been that the returns have been very low, especially the last year or two. It's very difficult to make money because all the hedge funds are pursuing the same trades, and it's very hard to get any kind of return in that situation. So this has been a really bad year or two for most hedge funds. However, a few funds have been investing in commercial real estate loans. Remember, they have to get out. They have to exit. So their loans that they make are shorter term, and an exit can typically be by either refinancing the loan by rolling it over, which means extending the loan basically, or someone else makes another loan or a permanent loan and gets the hedge fund out, or the asset is sold and the loan is paid off. Now, this is pretty much a new approach because the banks have had this role, but it's not been these huge banks like Bank of America or JP Morgan Chase. It's been the small community banks. They are now out of this business because they can't sell these loans off. They have to hold on to them. They can't. There's no more mortgage-backed securities market. So the community banks are actually reducing their exposure to these loans. They're having to raise their capital ratios, and hedge funds are seeing that there are huge opportunities with big internal rates of return in this business of commercial loans. However, they lack loan officers, loan servicers, underwriters. So there's a few hedge funds that have stepped into this. They're working with teams of underwriters and looking for deal flow, and they're willing to pay finders for good deals. If you want to know more about this, this is involving our Project X and some of the things that we're doing with hedge funds. Visit commercialfundingmillions.org. There's some videos and things that you'll want to get if you're watching this on YouTube or somewhere else. And don't listen to me without getting good legal and financial advice. This is Richard Geller. Thanks so much. Talk to you soon. Bye-bye.